Hi traders, it's Roberto. Today is Friday, March the 13th, and this is the pound yen update. Last week I sent out an alert on strong divergence off the weekly chart, and the trade is working out quite better than I expected. I was anticipating the market to wait a few days, and it didn't. The market just took off south. So let me just review this divergence setup because it's probably one of the most powerful reversal patterns in Forex. And it's very simple. This is on a higher time frame. Usually I start looking for divergence on a daily chart, but this is divergence on a weekly chart, which the effect could be several hundreds or even 1,000 pips. And let me just show you, and I'll give you some examples of what I mean. Here we have wave patterns using MACD default settings, and when you line up these wave patterns with price action, and specifically swing points, then you have divergence. So what I'm going to do is just briefly go over the divergence setup for those of you that are not familiar with divergence. And so what I need is for these wave patterns to line up. If they don't line up, we don't have divergence. So let me just use this as a reference point. Just put these arrows so you can see that we have these wave patterns that are lining up with a swing point. And a swing point is when there's a candle that is higher than the previous 2 or 3 candles to the left and right, and that makes that a swing point. And that swing point needs to line up with this wave, so essentially has to be inside this wave. MACD is a copycat of price, so if MACD goes up, if price goes up, then MACD goes up. If price goes down, MACD goes down. But what happens sometimes is that the wave patterns go in the opposite direction of price. So that is what is called divergence, and the markets tend to turn around when we see a divergence setup. To the markets, that signals to the markets have exhausted their rally and it's ready for deep retracement, and that's what's taking place right now. So if we just step back and look and see how clear this is, the swing patterns are lining up with these wave patterns, then what happens is there's always a retracement, and the retracement is here. So we would take the swing high, take that Fibonacci tool and draw it to the swing low. Price went all the way up to 61% and just collapsed from that level. And this was actually the best place to get in because your stop loss would have been above the swing high. We didn't see that till the market sold off about 200 or 300 pips, and that's when I sent out the signal. And now it's continuing to head south. We're up about several hundred pips on this trade as I speak. And as far as targets, the first target would be down here at that swing point, that 176.35. So we're going to stay in this trade as long as we can. I've also taken a lot of short trades. Let me just show you a few trades that I took based on the hourly chart. Notice how this is a nice trending sell-off, and this is where we entered a trade a few days ago up here. A market retrace, we took profit down at these levels. Market retrace, we entered the market again, it sold off. Market retrace yesterday, we took another position when it broke the swing point right here and exited at the bottom. Now we're in the market again and it's selling off. And then in each day, notice that we had the pound yen base essentially put in its daily range. So from last Tuesday, Wednesday, Thursday, today's Friday. Last Tuesday, the market sold off 167 pips. Wednesday, it sold off 233. Yesterday, it went down 166 pips. And hopefully, from the swing high to the swing low, we're looking for a projection of about 150, 160 pips also. So look for, if you haven't taken this trade yet, then today probably will be the last day that you can take advantage of the sell-off, because come Monday the markets are going to retrace. And once that retracement is finished, it should continue to sell off on Tuesday. So again, very powerful techniques. Let's go back to the weekly chart and notice this setup. Okay, well, I'm just going to show you some setups in the past that have worked out quite well. And I went over this setup last week where I showed the strong divergence on a weekly chart. And there it was. We have wave patterns, not as pretty as the one we see now, not as exact, but it still works. We have price action that came back down to the same level of support, but the wave patterns are going in the opposite direction. Then price came back down to retest the lows. Now look at this run up. Okay, it just continued to go up for several months. And that is, as I mentioned last week, that's exactly what's happening right now, where there's a potential of this pound yen to continue to sell off for the next few weeks. And if I take my Fibonacci tool and draw from this swing low to this swing high, then these would be the levels of support and most likely profit taking targets if it can manage to break below the swing point, which it should, given that this is a weekly divergence setup. So this would be 169.60 and then 158.65. So that's it for the tutorial. We do have news coming out of Canada in about a couple of hours, and I will send out a signal if we do get a strong response to that news release. Have a good weekend and see everyone next week. Thanks for watching this video.